Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We begin our review of the global economy with key releases in the US, Europe, China, India, and Japan. This week, investors recalibrated rate cut expectations after a string of economic and job market data highlighted a resilient US economy and accelerated hiring. Non-farm payrolls expanded at the fastest pace in 10 months in March. The jobless rate eased and wages continued to rise at a faster pace. Moreover, job openings, hirings, and separations were steady for the third month in a row in February. In addition, factory orders and construction spending rose in the double digits in February, indicating healthy economic conditions. During the week, Federal Reserve officials stepped up their campaign to lower interest rate cut expectations and signaled that imminent rate cuts are unlikely. In the Eurozone, retail sales declined for the 17th month in a row as consumers battled elevated interest rates and high cost of living. On the inflation front, Germany's inflation declined to 2.2% in March and dropped to the levels last seen in nearly 3 years. Overall inflation in the Eurozone dropped to a 28-month low of 2.4% and matched the level last seen in November. Much of the decline in overall inflation was driven by the slowdown in price increases for goods, but service inflation held steady at 4.0%. In Asia, China's service sector growth accelerated in March after new orders rose at the fastest pace in 3 months. The Reserve Bank of India held its repo rate for the 7th time in a row at 6.5% and projected fiscal 2025 economic growth at 7%. Japan's service sector expanded, but the manufacturing sector weakness persisted in March, and business sentiment among large companies moderated. Moreover, household spending declined for the 12th month in a row to $1,850, largely because of sharp fall in utility costs and energy bills. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury rebounded to 4.4%, following hawkish comments from Fed officials suggesting that the rate cuts may not be necessary in 2024. WTI crude oil approached $87.50 a barrel on the expectations of rising demand in the U.S. and China and OPEC Plus efforts to limit supply and rising prospects of a wider war in the Middle East after Israel bombed Iran's embassy in Syria. TTF natural gas prices edged down to 27 euros per megawatt hour and fell for the second week in a row on milder weather conditions in Europe, stable supplies from Norway, and ample gas storage in the region. The euro hovered near $1.08 on speculation that the interest rate difference between the US and Eurozone will remain high amid diverging economic conditions and an inflation outlook. The yen steadied near 151.30 against the US dollar after Japan's finance ministry stepped up verbal interventions to support the currency and arrest further depreciation. Let us shift our attention to major stock markets in the US, Europe, and Asia. The S&P 500 index and Nasdaq Composite extended weekly losses after investors pared back rate cut expectations amid a string of strong economic and job market data. European markets turned negative after retail sales in the euro area declined for the 17th month in a row. German factory orders rose less than expected, and investors dialed down expectations of a rate cut in June. The Nikkei 225 stock average dropped 3.6% on the persistent weakness in the yen after a hawkish comment from the U.S. Fed officials suggested no immediate rate cut in the near future. The SSE Composite Index in Shanghai rebounded after banks reported rising earnings in the previous week and foreign investors stepped up buying amid falling valuations. Indian market indices extended gains for the third week in a row after the Reserve Bank of India held its repo rate steady for the 7th time in a row at 6.5% and projected fiscal 2025 economic growth at 7%. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. Intel, the advanced semiconductor chip maker, reported a wider loss in its foundry operation. Tesla extended its 2-day loss to 10% after the electric vehicle maker reported unit sales declined 8.5% in the first quarter. DS Smith Group soared 8% after the UK-based paper and packaging company confirmed preliminary deal talks with international paper that could lead to an offer of £5.7 billion or $7.2 billion, higher than an offer from Mondi plc. Shockwave Medical agreed to be acquired by Johnson & Johnson for $13.1 billion. Teladoc Health said chief executive officer unexpectedly departed. Levi Strauss soared 10% after the denim apparel maker reported quarterly results that met market expectations. Volvo, the Swedish vehicle maker, reported a significant increase in sales in March and in the first quarter. Conagra Brands jumped 5% after the company reported quarterly results that met market expectations. Lamb Weston Holdings plunged 18% after the potato processing company reported weaker than expected earnings due to the slower transition to a new computer system. Fabless semiconductor companies traded down after a 7.3 magnitude earthquake hit Taiwan, forcing several semiconductor manufacturing companies to evacuate plants and close factories. U.S. health insurance stocks fell sharply after the Center for Medicare and Medicaid Services finalized its capitation rate to 3.7% for financial year 2025, matching the rate in financial year 2024. General Electric, the diversified conglomerate, completed its three-way breakup, and its energy business, GE Vernova, started trading as a separate company on Tuesday. In the week ahead, U.S. investors are looking forward to the release of the March CPI report and minutes of the latest FOMC meeting. The Bank of Canada is expected to leave its interest rates unchanged for the sixth time in a row. In Europe, the ECB is scheduled to announce its monetary policy decisions, including the timing and the amount of a possible rate cut. In addition, Germany is scheduled to release its exports and industrial production data. The UK is scheduled to release its international trade data, construction spending, and industrial production update. In Asia, China is expected to release its international trade data and inflation report, and Japan is scheduled to release its current account data for February and consumer confidence data for March. India is expected to report its inflation update, and investors are worried that a recent spike in energy prices may push inflation beyond the RBI's target range. The central banks of South Korea, Thailand, the Philippines, and New Zealand are likely to keep policy rates steady at multi-year highs. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rudera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next